Hello Slopers, Brian Johnson here from StockMeta.com, here to do a quick video for you. And I heard from 1,200 miles away, I actually heard Tim Knight exhale. So we got a little move down this afternoon. Was looking at like a 2 hour, 4 hour chart. You can see there's a big red bar. That's really pretty to see, leaving a pretty nice potential reversal candle on the daily. However, for those of you that are getting all giddy and bearish, obviously you must remember what we've seen in the past and how nothing's held so far. It's been almost straight up the entire month of March, which is, yes, extremely overbought. I absolutely will agree with you on that. But you know what? It's still straight up. So until more major levels have been broken, you need to be cautious. As you see here, the move down was nice. Really, it was fun watching this afternoon. Nice to finally see a red bar actually head downwards and kind of show some sort of acceleration. But when it was all said and done, on the Dow, you can see us finish right here at a support level. Now, maybe we go back up, retouch this or the 20 period moving average, roll over, make a nice little head and shoulders. But how easy would that be? I'm sure it isn't going to happen that way. Seems a lot of these potential head and shoulders patterns are failing, so we must be very cautious. Ultimately, what I'd like to see is a break below this lower channel line here. I want you guys to just keep this on your radar. That would be below the 10,800 area on the Dow. Keep watching for that. Ultimately, a break below there and a close below there would certainly be somewhat of a potential head start for the Bears. So, in a perfect world, I liked what I saw. For those of you that have been following along, you know I've been hoping for a turnaround midday, a roll down, and that way we leave no gaps above us. If we're going to go down and we're going to go down hard, I'd like to leave no gaps above us. So we're breaking down here. I'd like to see a move below 10,800 ultimately. Be watching for that tomorrow on a daily time frame. This is what I'm watching for those of you playing along at home. This blue line still has not been broken on the Dow anyway. As you can see here, putting in a big reversal candle. But what is that? Yes, I said a reversal candle. Remember, a potential reversal candle. We have seen lots of these reversal candles on the way back up. But until we get confirmation tomorrow, it's just another candle. So watch very closely coming into tomorrow. Any break back below, like I said, that 10,800 mark I think gets us on our way. I'm really watching closely this 10,730 area on the way back down in the Dow. Would like to see that give way if you're bearish. I am. All disclaimers, have a little bit of a short on the market right now, but may add to it if we break some further levels tomorrow. So below 10,700 I would be watching very closely as well. NDX on a 60-minute, you can see it holding nicely in this channel, and then, oops, what is that? Maybe a chink in the armor? Don't know. A little early to tell. There were some other indices that actually did this yesterday, one in particular. And today it gapped up and ran away. So be very careful of this. However, this is a good start for the Bears to see at least a close below this channel. We have done it before, but that was on a gap down. It did not run down and through this. Still got a lot of work to do. 1945 is still a pretty rough level here. It should be a strong level of support. The NASDAQ has been crazy strong. Looking at it on a daily, here's the blue line as it stands on the daily. We haven't even come close to retesting it. So, for what it's worth, be very careful if you're trading the Qs tomorrow. Below 1945 or 1940, yeah, okay, maybe a little bit of a spec short opportunity. But be very, very careful. Waiting ultimately for a break below 1900, that might give us a little bit more bearish sentiment in the market. SPX on a 60-minute, look how well we've held this channel. Beautiful, 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 and now the chink in the armor. This one not only breaks below the channel, it closes below the channel and below the 50-period moving average, which it has not done up till now. So we could maybe see a drop down. Maybe it turns around and retests the underside of this. I would watch this very closely for those of you that are futures players and have been following along with, I'm so sorry, Mr. Jack. I can't remember your first name. He's got a great chart. I've got the same lines on my chart, and it's great. Very nice. It's been behaving extremely well. If you're an ES futures player, I would suggest you find his chart and use it. Very useful. And this is working the same way. However, it has now broken this lower channel line and below the 50-period moving average. And if we go to a daily, we have broken the blue line. So the SPX is the first to actually close below this blue line that we've been following forever. Certainly since the beginning of February. Will the rest of the indices follow? We have yet to find out, but interesting to note this. Watch the financials over the next couple days. Let's see if they can give us any indication of what might happen. 1160, there's going to be some light resistance or support there. Light support there. 1150 is the next heavier line of support for obvious reasons. I'd be watching this one closely. Any big break below this would be, I believe, a very defensible shorting opportunity. If you are a conservative, this is your place, below 1150 and ultimately below the 20-day moving average. Oh yes, I left this on my chart. Wanted to show you this again. Today I saw a headline on Google that said, U.S. stock rally fades on strengthening dollar. And I just shook my head. Once again, guys, for those of you that believe that the whole dollar is inverse to the markets type thing, markets inverse to the dollar, you gotta look at the facts. You gotta look at the evidence, and it really hasn't been true since about December. Since December, the dollar has precipitously climbed to great heights here. It's way up over where it was. I would have expected to see somewhat of a bigger pullback than in the markets, would you not? If everything's moving inverse, certainly would make sense. But the markets are also up since that time frame. The last time we were at this level on the dollar was over here in June of 09. And we were sitting at about, 875-ish or so on the S&P. If we were down around 900, down around 950, 925, okay, maybe we have an argument. We're not anywhere close to that. So the whole dollar inverse to the market thing is done, at least for the time being. It has not been that way since December. So don't get sucked into that. And if you guys have not noticed this yet, hopefully this will be enough evidence to show you, that's just not something you can rely on anymore. It doesn't matter if the dollar's going up or down. The markets are just going to do what they're going to do at this point. So keep that in mind pushing forward. Let it break these heavier levels of support before you start trying to call a top up here. Otherwise, you're going to get your hand chopped off if you haven't already trying to call a top up here. Let the charts tell you when to get short. And they have not. They've certainly started to sound a trumpet here, but nothing has been broken to the bull side. Nothing's broken. This bull march is still intact. So watch for levels like 1160, 1150 to break first before you start really looking at a larger bear commitment, if that's the way you're going to trade things. All right, guys, that'll do it for now. See you soon. Bye.